This short clip is from my live trading room. You can engage directly with my fabulous team and me at LaDucTrading.com for all our research and trades. Or for just my daily live streams, you can access via YouTube memberships. All links are in the description. I have a chart right now of XLF because it was a recommended swing short that came down into price target 47.81, and you can see it closed at exactly 47.81. So this is from this rollover. We just needed to get above, focus on the weekly right here. We needed to get below 52.32 on the monthly. We did. We bounced into it, broke down, came all the way to the 100-week EMA, because once we got below that 50-week and those Bollinger Bands open up, this is just what it does. Anyway, we had the macro risks, etc., that have, the geopolitical, I should say, that have expanded over the past few months as warned into more of a growth risk. Anyway, this has been a great short, and all I'm trying to say is it's still a weak, fragile market. There's no question out about it, but I know that many of you are short financials, and I just want to kind of show you and remind you that both TLT and XLF have fallen into price targets where we could see some stabilization. So that's exactly what I was looking at right here. So we got the 100 week, we've got a trend line, and we've got my 47.81. You can see it on the daily. We had a fabulous continuation, lower highs, lower highs, lower highs, all the way into boom, right on this trend line, which is ironic. This is a daily trend line. Anyway, we've got a little bounce this morning, and you can also see in TLT where I had specifically 85.48 as a target, but you can also note we've come out of this wedge. I'm very much a yield bull on higher oil, higher yields, higher volatility regime, the whole thing, higher dollar. Yes, yes, we'll look at that whole heat map, but for now you can see we're right on that. We closed at 85.64 and we had a low of 85.45 and my target was 85.48. So we're having a big old bounce this morning, which means stabilization in markets. And I wanted to write about that a little bit more later, but for right now, just to kind of keep in mind, here is our heat map. This is how we closed on Friday first before we go and look at it. So the dollar is getting a little busy, right? And I said, once we get and stay above 100.5, we could see some more headwinds. This week, we're going to talk about this week and next week potential stabilization. But for right now, yields also were extremely elevated. And yes, they closed above my 4.3. They will close above my 4.33 for the month, likely the quarter. We're not there yet. We've got 2 days. Oil has moved higher. The Houthis have entered the war as expected. So we've got escalation there, ground troops building. So there's no risk premium that's coming out of oil or yields for that matter, or dollar. So anyway, this was the close or thereabouts. This was the close of my trading room anyway on Friday. I just wanted to kind of grab that and then show you, because we had a pull down in SPY of 1.7%. That's 2 days back to back, very weak. And I want to talk about that. Market fragility is definitely still in the room with us, but we do have a big option event on end of quarter close. Massive, right? Like trillions of notional value, all those big numbers. But there's a big one called the JP Morgan collar. So this is a little review here. Get the 2 hour. Dollar is still very firm. And we've got this bounce in SPY here and bounce in Qs and sort of stabilization in crude at 102 area and 10-year at 4.35. But the point is, we have definitely had this rollover below my 65.08. We've had this, beautiful rollover. We had already formed a cradle formation. We broke the 10-week. We closed below the 10-week, and then we closed below the 10 and the 21-week. And it has just honestly every target and then bounce, and then the 65.08 and then bounce, and then obviously this is sitting in kind of nowhere land. We can have a little bit of interim support, as I showed a little bit of interim support, but big picture we're heading down to that 6100, which is the 100-week EMA. So the only target that I had for this week was 64.1654 for SPX. It was a gap fill from September 2nd. We threw it, past it, and now this morning we're having a little reflexive bounce. And what I wanted to highlight was the fact that we do have a JP Morgan collar that does tend to serve as a pin. 64.75 is the pin. We closed at 63.69 on Friday. I think we hit a low of like 63.30 Sunday night. The pin is 64.75. That could help pull the markets up a little bit to that level. Backwardation, VIX backwardation
inflation, it's in the house again. Negative gamma is firmly entrenched, and that JP Morgan caller holds about $2 billion worth of negative gamma. They have to roll on the 31st. Normally, as I mentioned to you, I don't focus on that level. Only do I focus on the JP Morgan caller at the end of the quarter. So it's a big $2 billion caller that will roll. We will watch where it rolls to, likely lower. They sell calls above and then they buy a put spread. That's the area of potential target with some relief in VIX today and tomorrow. Then prepare for a little bit of de-risking ahead of Thursday when the market will be closed Friday. Okay, so I think that's kind of it in a nutshell, but going back to the heat map, just remember my big overarching warning into this March to May. Market fragility I flagged over 2 months ago, and that has totally materialized. We got a sell-off now, 9%. It's not a big one, but it can become a dangerous one. And we have gone from geopolitical shock to energy shock to supply chain shock to growth shock. And now I'm firmly focused the past few weeks on AI shock. And I posted a video that client Tim shared this morning, which is absolutely fabulous. So take a look at that when you get a chance. Anyway, I believe we can get some stabilization and probably this week, a few days. And then next week, I will show you where I'm looking for after we come back from start of Passover is the 1st. I forgot to mention that. And then Easter Sunday. I think we can get some stabilization next week. But in a nutshell, the risk is not gone by any stretch, just some relief. Again, we're in a backwardation for VIX. It's unsustainable to stay there. It can stay there if we have a COVID type cascade, 35% down in 35 days, no question about it. But I've shown you my intermarket, how I can see this rounding the corner as we move higher. So it's still working higher. That's it. And it's going to stay, I firmly believe, very, very, very sticky and make it very, very, very hard for us to have a reflexive bounce now. I can see a reflexive bounce coming into play in mid-May. I've seen this for months, even before the war. Guess what? Trump is going to meet with President Xi on May 14th about this whole China trade summit. So they have set the dates for this meeting in mid-May. So there's, fascinatingly enough, I can finally find some macro that meets my prior analysis. It's fascinating. Anyway, happened to be the Iran war, started on February 28th, and I'd seen March through May. Remember that? Well, mid-May, I said, well, I just found out Trump's going to meet with Xi on May 14th. So that could provide also some stabilization, or I should say a reflexive bounce.
Join Club to trade with Samantha. Scan this QR code or click the link in the description.